This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. This is Back Roads of Illinois, server to farmers and ranchers in central Illinois and the Midwest. We're glad you're here on today. I'm Cesar Delgado from Back Roads of Illinois. We were talking about the agricultural industry and information on the grains markets. I hope that you will join me for Inside of the Farm Sector on Back Roads of Illinois for each day only on Agri America podcast page and on my YouTube channel. It's Back Roads of Illinois. I hope that see you there. I'm with Charlie Martinez from the University of Tennessee in Knoxville. He is a beef specialist in Knoxville at the University of Tennessee. We're asking about the cattle markets with these prices are subject of the news from Washington, D.C. Though last week was pretty good for soybean to China, but the corn demand for the future. We were talking about it with Matthew Kruse from Commstock Investment. This is Back Road. I'm with Charlie Martinez from the University of Tennessee in Knoxville. He is a beef specialist in Knoxville at the University of Tennessee. We were asking about the cattle markets with these prices are subject of the news from Washington, D.C. Hey, Charlie, how are you?
Doing good. It's been quite a couple of interesting weeks in the cattle markets, especially since the last time I was on with you. It's been, for the most part, still good for cattle producers, but in the futures market and everything else, there's been some just interesting times.
Charlie, how much should have Argentines beef to come in the United States? Could you tell us that who are watching the trade dilemma?
Yeah, so I guess it'll be almost 3 weeks now from the day of this recording that President Trump had announced that there was plans to possibly increase imports from Argentina and specifically beef in hopes of trying to, I guess, alleviate some of the pressure on retail prices for the U.S. consumer. And when that happened, and it caused a lot of, I wouldn't say chaos, but it caused a lot of just uncertainty and turbulence in the markets, and we saw markets react totally different. The cash versus the futures markets, and so it set the stage for some interesting last couple of weeks. And I think when we think about Argentina, the couple of things that we got to keep in mind is when we think about imports historically by the U.S. from countries, Argentina is usually around that six, seven, eight, sometimes ninth in terms of volume or value that we bring into the U.S. And I think last year they were the ninth, ninth largest, or they ranked number nine in terms of volume of imports to the U.S. And so when we think about that, put that in perspective, Argentina and their production is about one fourth or 25% of what the U.S. produces. So they're relatively small compared to the U.S. And even if we were to quadruple our imports from Argentina here to the U.S. and beef, I don't think it would be quite the amount that can alter any prices, let alone decrease prices for the retailer. But it would still help in some sort of way in some segment of the supply chain for ground beef folks. So usually what we bring in from Argentina is ground beef or trimmings. And right now we're short on cattle in the grinder market to make beef or to make ground beef. And so it would help in some aspect from that perspective, but I don't think it would decrease prices by any means, just simply because our demand's really strong for beef, regardless if it's ground beef or steaks or anything of that nature. Quality is also at play, but because we have such strong demand, I wouldn't see that prices were decreasing because of the extra increase of Argentinian beef to the U.S.
Do you have any concerns about it with this decision?
I don't, the purist in me of an economist, I think it's just the market at play. I mean, we think about the outlook in the cattle market. We know that we have tight supplies, so tight supplies equals tight supply of beef or lower supplies of beef, ultimately to the retail or to the consumer at the retail level. And so, whenever we see that, and historically, whenever we've seen that, we see our imports increase. And so, I think it's just the markets at play trying to find product that we can bring into the U.S. to help offset some of the decrease in supply that we have domestically. And so, from that perspective, I don't think there's nothing wrong. It's simply the markets at play. I think when you get outside of the market and you get away from the fundamentals of the market, there might be some aspects that it impacts people different ways, whether that's from a social perspective or it could be someone that is, depending upon your segment of the supply chain, it could have impact for a wholesaler or retailer, but for the most part, I think it's simple economics at play. Whenever we think about being short on supply, we're going to try to offset that with imports, and that's nothing out of the. It's not unusual for us to do that as a country, especially if you look at how we import and export depending upon our domestic supply.
Right.
Outside of the uncertainty is that some of the people throughout the supply chain, like a feeder or a packer, they might not have the cash on hand in order to lock in positions and have to sustain, or the money they could be short on cash to sustain some of the margin calls that would come with the movement of those contracts. And so I think as we think about the futures contract, we have to keep in mind that you can lock in a price or someone can lock in a price, but there still might be margin calls that occur. And that, depending upon the swing and the volatility, just, the volatility that we've seen most recently, that could take a big hit on someone's cash immediately. So I think some of that is at play as well, especially when we start thinking about deferred contracts in the future.
Wait and see.
I think wait and see is kind of at play. And I think part of the reason why we're in wait and see is because we really don't have much information outside of pricing. We have no way of knowing inventory. Therefore, if we have no inventory reports or cattle and feed reports, we don't have any indication as to what's happening nationally from a rebuilding perspective. I would still hang my hat on that there was not going to be much rebuilding this year, even throughout the year. I would think that starts to become a question next year. But maybe, hopefully, we would get a January 1 inventory report next year. It sounds like as the day we're sitting here recording, it sounds like there's a lot of movement to try to reopen the government. There was talks last week about reports getting released in a couple of weeks, regardless if it's still during a shutdown or not. And so outside of the cattle world, we know there's a lot of uncertainty and chaos that is occurring in other markets that tend to spill over, things like the dollar strengthening. And so that's going to move prices as well. And so there's other facets that are at play outside of the industry that I think will have impact. And so those are other things to wait and see what happens.
I'm just curious about the consumer budget. Do we still have good demand for this month?
If we look at the prices that we get, which is AMS, and we look at the quality prices, what I mean by that is like the branded, the select, the choice, and the prime. We're seeing positive signs on that. What I mean by that is strengthening of prices. And so to me, that signals that there's still strong demand, even through this uncertainty and turbulent times. It seems that there is still strong demand for beef. And, one of the things that we can also see or that can tell us a lot is the cutout. The cutout has been slipping a little bit over the last couple of weeks, but some of that is seasonality at play as we'll start getting ready to ramp up for the quarter 4 holidays of Thanksgiving and Christmas and New Year's. I would expect for that to go back up or to reverse trend because that's usually what we see. And so currently, if you look at the cutouts, it's down. But if you look at quality grade cutouts, we see some of those grades, the higher quality ones, still increasing, which means that there's still strong demand even for the highest quality of product. And we're starting to see some ungraded, some select, hold steady to trend or trending lower. which could be a signal of, some demand coming back a little bit. But as you and I talked, last time I was on, there's been a lot of talk about calling beef inelastic, meaning no matter what price it's at, people are still going to buy. I don't really, I think, theoretically, that's not a true statement. I do think that beef has become quote unquote more inelastic, meaning the demand has been so strong that even an increase in price, there's still some room for demand to stay steady or increase because it's such a high demand product. And, I think as we continue to roll as an economy, I think there's still a budget constraint out there. Right now, they don't seem like we've touched the constraint or have gotten close to constraint because we have signals of strong demand. The question is going to be how much higher can we go before we hit that? And right now, same answer as last time when we were together. We still have some room, it looks like.
Do you think that we can get started an economic downturn in the future with uncertainty?
I would say my personal answer would be no. Because if we look at the Fed Reserve lowering interest rates, that's a whenever they do that, whether they're increasing or decreasing interest rates, that is based on some of the market signals or the macro signals that they see from a U.S. economy standpoint. And when we see them lower the interest rates, and then we see the outcomes such as the strengthening of the U.S. dollar this past week since the lowering of the interest rates, I think that is showing that there is some steam gaining for from an economy standpoint, some steam getting bigger, strengthening of an economy. And so from that perspective, I would say my answer would be no. I think there's some signals, whether it's the strengthening of the dollar, it could be the GDP signals being steady to strong. It could be unemployment rates. There's other signals at play that I think we're still holding pretty strong. And for the last couple of days, it seems like we're gaining some steam, especially look at other indicators, other market indicators. It seems like we're actually, reversing a curve a little bit of the trend that we've seen recently where it was becoming a question of could we have an economic downturn? I would say in the short run, my answer would be no. Where as we record today, that would be my answer. But you know, as we all know, things can change in a matter of a minute or some news outbreak that would occur that can change markets. So, and everything held constant, no would be my answer.
Right.
What is your final thoughts about the feeder cattle?
Whoa. So I think my final thoughts when we think about especially the feeder cattle market, it's still strong. I think the last couple of weeks have showed us that volatility can happen, um, you know, as simple as a flip of a light switch. And so risk management should be thought about, whether it's LRP or trying to do a forward contract of some sort. I would really think about that if you still have cattle, especially if you're in the stocking phase or the stocking sector of the beef supply chain. That's something to think about. And then, if you're a person that's thinking about rebuilding and you're on the fence about raising your own replacements or buying that expensive bred replacement female, think about things of, you buy an expensive bred female, she has a shot if everything holds steady. She has a shot to have her first two calves in the highest market prices that we've seen, so she could recoup a lot of her value. But even if a market downturn happens and we have prices that just drop, that expensive bred female that you bought builds you some depreciation protection there. There is some depreciation or a shield that can be built out of her value. So you still have some protection that way. And so if we're thinking about rebuilding, I would highly recommend, putting pencil to paper, marking out the value of your replacement female if you raised your own versus buying one with equal or better genetics, and thinking about, what that animal can do for you once we get past these high prices. And is she a better female? Could you buy one that's better than one you can raise? And there's other questions at play, but if we're thinking about rebuilding, that's something I would definitely think about, and then also have risk management in the back of my mind as well.
Thanks, Charlie. I enjoyed our conversation for today. And let's go, Illinois. They are not going to be in college football playoffs than we thought.
I'm a Bielema fan though, so he he's a good football coach.
Charlie Martinez from the University of Tennessee in Knoxville.
Thank you.
So last week was pretty good for soybean to China, but the corn demand for the future. We were talking about it with Matthew Kruse from Commstock Investment. Hey, Matt, how are you and how was your harvest in Iowa?
I am good. Thanks for having me. Uh, Harvest went well in Northwest Iowa for the most part. We didn't have too much rain during harvest. There's maybe a few days where we got shut down. We got rained out, but no real breakdowns. Everyone thing went pretty smoothly for the most part. So we were, done within the month of October, which is always kind of ideal. And so we're already kind of focusing on tillage work here this month.
Matthew, let's start with our conversation about this deal from last week in South Korea. And I talked with your colleagues on this. Brian agreed. However, what is your position on the fundamentals on the beans markets?
Well, I suppose it depends if you're a glass half full kind of guy or glass half empty. I ultimately, a trade deal is better than no deal at all. And so I think people are relieved that we're maybe back to having China purchase U.S. soybeans again. If you look at those totals that they have agreed to or supposedly agreed to, we haven't actually gotten any confirmation from China. Um, they're not insignificant, but they're still maybe slightly below what China has purchased from us historically. So that 2026, 2027, they've agreed to 25 million metric tons each year, and that's a little over 900 million bushels. And if you look at their 10-year purchasing history, they've averaged a little over a billion bushels. So it's probably, they're essentially agreeing to purchase 10% below their average. And so, it helps. Obviously, we don't want to turn that business away, right? But I don't know that it doesn't look like agriculture gained anything out of this, and that's maybe what was disappointing is we were kind of sold on the idea that U.S. agriculture was going to come out ahead because of this trade negotiation, and that really doesn't seem to be the case. Now, that's not to say that China, given the right circumstances, couldn't come and buy more than that amount. But at the end of the day, those uh, agreements are unbinding, meaning there's really no repercussions if they don't follow through and on those purchase allotments. And so I think right now the trade is just looking for any confirmation from China that they're actively buying in the U.S. soybean market. And there's been a little bit of light buying, but it's a relatively small volume at this point. And so I would just say look more at what China does rather than what they say. However, what they're saying right now is nothing. They really haven't made any official announcements of when that is. And so there's still some questions about, the initial 12 million metric tons. Is that here by the end of the year, or is that between now and the next 12 months? There's a little bit of confusion there. If you go off of what uh, our administration says, that's supposed to be purchased here by the end of the year, which is a very short amount of time. But we haven't seen any real confirmation of that as of yet.
How about the technical side to it on the beans markets with these agreements, Matthew?
On the technical side, I mean, everything is overbought at this point and seems a little bit overdone. I mean, we've had a tremendous rally at this point. Um, I myself am kind of looking for some sort of correction uh, where we go back and close that gap that was set last week, and that gap remains open. And so that would see us, falling back 40 cents or more. Um, and so I think for us to sustain these levels, we need to see more confirmation from China. And so maybe that will come, but until it does, I think it's going to be hard for us to kind of sustain this momentum higher.
How about the bailout for farmers?
What are my thoughts on the bailout for farmers? Um, I think we are looking for something. Everyone has a lot of opinions on this. I think most farmers or people in agriculture would tell you that they don't want to bail out, they don't want subsidies. They want free markets and to be able to compete and stand on their own 2 feet. And I would agree with that. But at the same time, this shouldn't come as any surprise because we knew that this was a possibility going into, these trade negotiations with China and whatnot. And so I think you can make a strong argument that our market and our exports were negatively impacted by these trade agreements. And some people would say, well, you voted for that, you got what you wanted or what you supported. I think some farmers will maybe argue that they were kind of taking one for the team, that they were there were other things that the United States as a country got out of that deal, through higher tariffs or rare earth minerals. And so I'm not saying that's what I believe, but just trying to present both sides or at least present the thinking process out here in the countryside. But um, yeah, so I think we need the government to come back online first, but I think we are still looking for some sort of payout, as for at least short term here. And I think every crop might get something, but it's probably going to be heavily allocated towards soybeans and maybe a little bit on cotton, probably less so on corn. But those seem to be soybeans and cotton seem to be the two crops, U.S. major crops that were impacted the most.
What is your thoughts on the trade talk for the future until next president?
Well, I think these tariffs for right now are up in the air. They're actually, I think, beginning maybe yesterday, the U.S. Supreme Court was studying a lawsuit about the validity of these tariffs altogether. Does the president actually have authority to enact these tariffs? Because traditionally, it's been Congress that's enacted these tariffs, but the president, bypassed Congress on a lot of these things referring to kind of some emergency um, disaster act, saying that arguing that these tariffs were necessary, and and so that we're waiting to hear back from the Supreme Court, which I don't know if that'll be a month or a week. I don't know how long that'll take to hear back from them, but eventually we're going to hear back, and they may rule in his favor and say it's okay, in which case I'm sure he'll continue to advance those tariffs. Um, or the Supreme Court might come back and say, no, you can't do this, and then he might have to refund as much as $100 billion, which could be a problem because I think that money might have already been spent. I'm not sure, but I think they're bringing in 20 or $30 billion a month in tariff money already, which is essentially a tax on uh, the American public, that money gets passed on to the consumer ultimately for the most part, and in cost increase. And so I don't know, that I think that's probably what we're looking for right now, is just to see a response from the Supreme Court.
Do you have some thoughts about this cattle markets with the feeder cattle and dilemma from Argentina now?
Well, yeah, I mean, t today we were limit down, and so it's kind of an ugly look. It looks oversold. It seemed like we were too extreme on the upside when we were rallying, and now maybe we're um, too extreme here, moving lower on the opposite end of things. But um, I don't know that it's so. I don't know that's due to any real fundamental change. I think maybe Trump's comments about having cattle beef prices being too high might have triggered this, but now it seems like there's just a lot of fun money jumping in and probably pushing the market lower. But I don't know. It's a double-edged sword. I know some people that probably that were hedged were probably tired of paying margin money and maybe look for a little bit of a reprieve, but it also could go too far, and it's probably at that point now where cattlemen don't want it to go any further.
How is the cash cattle side without the government today in the North?
You'd have to ask one of our other brokers in the office. I don't track that as closely, but I know the guys in our office do. They can tell you every day what cash settlements have been and been trading for. But I don't. It's in our commstock report too, but I haven't seen today to be able to tell you. I'm sorry.
Do you have any final thoughts about the beans production for next year?
About bean production for next year. Well, I still, well, we got to see what happens here with this rally. If it can maintain this rally, it might get more people to want to plant more beans next year. A month ago, I probably would have told you that they, would have kept acres not too different from where they're at last year, where we kind of maximize corn acres and minimize bean acres, just because of the financial metrics that there's a little better chance of profitability on the corn, and the profitability outlook on beans is pretty poor now. Rallying here, over a dollar in a short amount of time has maybe changed that a little bit. So we'll have to see what happens. But there's a lot of things can change yet, but. I don't know. I kind of stick to a rotation, and so I don't like to chase the market, and so I'm just kind of sticking to a rotation. I know a lot of other people do the same thing, but I don't know. We'll see. Yeah, I think you still have a pretty big basis level in our area anyway. 75 under, and so $11 beans is still 10.25, which is okay, but not it's pretty close to the cost of production. It's not great by any means, but um and so I don't know. We'll have to see.
Thanks, Matthew. Hope you have a great holiday season.
Thank you, sir. Yeah, have a good Thanksgiving, and if I don't talk to you again, have a good Christmas.
Matthew Kruse from Comstock on the Markets Club podcast for this week.